The housing market has been booming and home prices have been growing faster than ever, which is great news if you're a homeowner. But the question that I'm going to be dissecting is, are home prices growing too fast for their own good? What's up everybody, I am Jaspreet Singh from theMinorityMindset.com, where money minds rethink rich. The American dream is to be a homeowner, but that dream is becoming a little bit more difficult to accomplish because home prices are rising so fast. In 2020, median home prices hit a record high of $320,000. Let's do the math. Let's say you want to buy an average home. Right now, that's $320,000. And let's say it looks like this. You got a lopsided home. Hopefully your real home isn't lopsided. Let me draw you a nice mustache. So you want to buy this lopsided home and you want to pay $320,000 for it. Well, if you want to buy this home, you need to have some cash ready to buy it. Typically, you need a 20% down payment. 20% of $320,000 is $64,000. And then you need cash for all your closing costs. That's typically around 3% of the home value. 3% of $320,000 is $9,600. So if you want to purchase this home, you need to have at least $73,600 in cash ready to go in order to purchase this home. If you don't have $73,600, then you're gonna have to get a different type of mortgage where now you're gonna have to pay higher fees and you might have to pay PMI, and so it will cost you more money in the long run. But if you want to purchase this home with a typical conventional mortgage, then you need at least $73,600 in cash right now. This is what's making home ownership less affordable because a lot of people don't have $75,000 just sitting there ready to buy their home. Right now, we are seeing home prices go up faster than ever, which is great if you're a homeowner because now all of a sudden you have more equity in your home. But it's not so good news if you want to buy a home because now buying a home is even more expensive. So the question we need to ask first is, why are home prices going up so fast? Once we do that, then we can dissect if home prices are rising too fast, and if home prices are rising too fast, then what can we expect coming next? I used to work as a real estate agent, and one of the questions that I would ask you if I was the one selling your home is, how much do you think your home is worth? And this was always a very interesting dilemma. You might tell me, hey Jaspreet, I think my home is worth $500,000, so that's what I want to sell my home for. And this is where things get really interesting because you think your home is worth here, but you are not the dictator of what the value of your home is. The market is. The buyers are. Because now, if you market this home for sale for $500,000 and the highest offer you get is $450,000, is your home really worth $500,000? No, it's worth what the market is willing to pay. If the market is willing to pay only $450, then your home is only worth $450,000 because that's the most anyone's willing to pay. Likewise, if you think your home is worth $500,000 and now we market it for sale and now we get a bunch of offers and someone's willing to pay you $550,000, are you gonna say, hey Jaspreet, no, I'm only gonna sell it to them for $500,000 because that's how much I think my home is worth? No, you're gonna sell it for $550,000 because that's what the market is willing to pay. So we have to start here. Why is it that $500,000 homes are being sold for $550,000? Well, this goes back to supply and demand. If you have more buyers than sellers, that means buyers are gonna have to bid against each other to buy a home. And if buyers are bidding against each other to buy a home, that means this is going to push home prices up. So if you have more buyers than sellers, then these buyers are fighting each other to buy a home, which is going to push home prices up. If you have more sellers than buyers, now sellers are going to have to fight against each other to sell their home to a buyer, so they're going to have to cut their prices, and that's the only way you're going to be able to sell your home, and that pushes home prices down. So when you have more buyers than sellers, home prices go up. When you have more sellers than buyers, home prices go down. Home prices are going up, which tells us that there are more buyers in the market than there are sellers. But the real question we have to understand first is, why are there so many buyers out there right now? And there are 4 potential reasons that could cause more buyers to enter the housing market. The first reason is more jobs, because if there are more jobs out there, then more people will have an income, and if more people have money, then more people are wealthy, and more people will want to invest this money into their own home. However, I really don't think that is the case right now, because right now there are millions of Americans out of a job, unemployed, so I don't think that's what's causing more buyers right now. The second reason why more people will go out and buy homes is when you have higher wages, because when people have more money, they want to invest this money back into their home, because owning a home is the American dream. However, I don't know how true that is either, because after the 2020 pandemic and the 2020 recession, the tech industry boomed, but the rest of the economy kind of slowed down, and you saw lots of people get their wages slashed, you saw lots of bonuses canceled, and you saw lots of raises put on hold. So again, I don't think we have higher wages out there, which is contributing to these more buyers out there. So people are not buying homes because there are more jobs, and people are not buying homes because of higher wages. Then people might be buying homes because of number 3, interest rates. When you go out and you buy the $400,000 home, then chances are you're not going to go to your bank account and pull out a $400,000 check and give this to the seller. For the majority of people, you are going to take a loan from the bank and use the money from the bank in order to buy this $400,000 home. And so now, after you take out this loan from the bank, you have to pay the bank back plus interest. But when interest rates are lower, that makes borrowing money cheaper. And what we saw happen after the 2020 recession and pandemic was interest rates got slashed again and again and again. This made borrowing money and getting a mortgage much cheaper, which made it more affordable to go out and get a mortgage, which incentivized a lot of people to go out and buy a home, because now all of a sudden you can borrow $500,000 for your home and pay a whole lot less money in interest. So people have been trying to capitalize on these low interest rates, which is driving more buyers into the market, which is exactly what the government and the Federal Reserve Bank wanted, because when they cut interest rates, they're trying to stimulate the economy by encouraging people to go out and borrow money and spend money, because that helps get the economy moving. And so the Fed and the government are getting what they wanted, because they wanted people to go out and borrow money and buy homes, which gets the economy moving. And so these lower interest rates have been driving more buyers into the market. The fourth thing that can contribute to more buyers in the market is what I call the X factor. And so this X factor is like external influences that could cause more buyers or less buyers in the market. And I'm going to talk about this in just a minute, so sit tight. So home prices have been going up because there are more buyers in the market. And there are more buyers in the market because interest rates have come down. But the question now is home prices going up a good thing or a bad thing? Well, it depends who you ask. If you already are a homeowner, then this is great news, because maybe you bought your home for $400,000 a few years ago, and now your home is worth $500,000. So you made $100,000 by doing nothing except sleeping in your bedroom. Money come to my house. Money come to my house. Talk about making money while you sleep. But if you ask somebody who wants to buy a home, either to live in or as an investment, then you get a very different answer. Because when you want to buy a property, then you don't want high home prices. You want home prices to crash, because now you can buy homes for pennies on the dollar. And then you want home prices to skyrocket right after you buy your home. But higher home prices make it even harder for somebody to go out and buy a home, because now you need more money for a down payment, you have a higher monthly payment, and so affording a home isn't as easy. So a booming housing market is good if you own a home, but it's not so good if you don't own a home. You see the exact same thing happen in the stock market all the time. People start talking about a booming stock market and how it's so good for the economy and how it's so good for America. But really, it's only good for people who own stocks. Because if you own stocks, then you get the benefit of a booming stock market. But if you don't own any stocks, then a booming stock market doesn't really do you any good. So home prices are booming, which is great for homeowners, but it's not so good news for people who are not homeowners, because now it's more expensive to own a home. And the reason home prices are booming is because we have more buyers in the market. And up until now, the reason we've seen so many buyers enter the market is because interest rates were slashed to near zero, which makes your mortgage more affordable. But as we exit this recession and this pandemic in 2021 and 2022 and 2023, what we will probably see happen, unless something changes, is more people will have jobs. Because if the economy recovers and more companies reinvest into their growth and more companies start and grow, we'll see more people have jobs and we will see unemployment go down. If that happens, then more people will have money to hopefully afford a home. And then if we see the economy start moving and booming again, then we could see higher wages because now companies who have more money can reward their employees with raises and bonuses and promotions. And so now if people have more money, then they can use this money to go out and buy a new home. So in the future, we could see more jobs. We could see higher wages, which would drive more buyers into the market, which could push home prices even higher. And then we hear from the Federal Reserve Bank that right now they want to keep interest rates near zero until at least 2024. That's the minimum point that they're saying right now before they will start raising interest rates again. So interest rates will continue to stay low. So if this is the future side, we'll see more jobs, more wages, low interest rates, which could push more buyers into the market. Again, this could change, but this is what it looks like right now. And then we have to look at the X factor. So this X factor is external stimulus that could cause home prices to go up or down. And right now, at the time of me recording this video, there's not too much of this X factor out there. However, this could change in the future because of the Joe Biden presidency. One thing that Joe Biden keeps saying that he wants to do is he wants to give first-time home buyers, many of these people are young millennials who don't have the down payment ready to go out and buy a home. He wants to give these first-time home buyers $15,000 for free as a credit. That way you can go out and save money on your down payment to encourage first-time home buyers to go out and buy a home. The purpose of this program is to encourage people to go out and buy a home, which means that if this program works and if it gets passed, then it would create a new flood of buyers into the market, which would push home prices even higher. The second thing that Joe Biden wants to do is open up the United States for foreign investment. So this is something very different than Donald Trump, because Donald Trump had a hard stance on immigration and he had a hard stance on foreign investment in American assets. Joe Biden has a very different opinion. He wants to open up the United States for foreign investment, which kind of open up floodgates for foreign money coming into the United States to buy up United States real estate. If that happens, then you could see money coming from Asia and Europe and other countries around the world, and you can see this money come into the United States, especially the big cities, and this money could start buying up real estate in the United States. If that happens, now you have a whole new wave of buyers in the United States for American real estate, and this could push home prices up even more. Again, I can't predict the future. I don't have a crystal ball. I'm just telling you what we know based off of the data that we have today. All of these things can change almost instantly. I mean, if the economy doesn't recover like everybody thinks, then we are not going to see more jobs and we are not going to see higher wages. And if the Federal Reserve Bank decides to raise interest rates faster, then we don't have low interest rates anymore. And if Joe Biden changes his policies, then this X factor is not there anymore. So I don't want you to just jump to conclusions. I want you to understand how to analyze the information. So now, are home prices rising too fast? Well, it depends what you mean by home prices. When people say it's a problem that home prices are rising too fast, what they mean is that the real problem is home affordability is going down too quickly, because home affordability is what really determines if you can buy a home or not, versus home prices are just the front facial value. So if you want to understand are home prices rising too fast, then you need to know if home affordability is going down too quickly. And the way you understand home affordability is by looking at three different things. You got to look at home prices, mortgage rates, and wages. Because when home prices go up, that makes owning a home less affordable. And when mortgage rates go up, that makes owning a home less affordable. And when wages go down, that makes owning a home less affordable. At the time of me recording this video, home prices are going up. We've already established that. And so higher home prices make owning a home less affordable. But at the same time, mortgage rates have been going down. So this is kind of converse to home prices because lower mortgage rates make it more affordable to own a home. So higher home prices, less affordable. Lower mortgage rates, more affordable. But this is where things get even more tricky because when mortgage rates get cut, this pushes home prices higher because lower mortgage rates push more buyers into the market, which push home prices higher. So cutting mortgage rates make owning a home more affordable initially, but over time, they can make owning a home less affordable because that can push home prices higher than the benefit you got from lower mortgage rates. And then with wages, at the time of me recording this video, wages are not keeping up with the rising housing costs. What we've been seeing happen now over the long term is the housing prices have been growing 4 times faster than wages wages. So wages are going up, but just not as fast as housing costs. So we have rising home prices, which makes owning a home less affordable, and we have wages that are not keeping up, which makes owning a home less affordable, and we have mortgage rates that are going down, which makes owning a home a little bit more affordable, however, only for a little bit of time, because as mortgage rates go down, this pushes more buyers into the market, which pushes home prices up. So if we analyze these three things together, then we can really understand, are home prices rising too fast? In general, for the average American, yeah, they are. Your wages aren't keeping up, home prices keep going up faster and faster, and yeah, interest rates went down, which was good, but that's now pushing home prices even higher. That's why the government wants to give out $15,000 for free to first-time home buyers. That way it's more affordable for you to go out and buy a home, but over the long term, that's going to push home prices up even more because now you have more buyers entering the market. So owning a home is more difficult now than before because home prices keep going up while wages don't keep up. Couple that with all the new expenses that young people have, like student loans, and now it is much more difficult for somebody to be able to afford a home. That's why understanding money and financial education is so much more important now than ever before, and we have tons of videos to help you out with that on our YouTube channel. If you enjoyed this video, here's a video that I think you'll love, and while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter, and as always, keep hustling. It is gonna take you 40 years to save up $80,000. That way you can finally buy this $400,000 home. Now, obviously, there are alternatives.